All right, all right. Happy Monday, everybody. Good morning, everybody. Today is January 8th, 2024. I hope you guys are well. And the top story this morning is what's going on in China. Again, it's not getting the coverage it deserves in the mainstream press. I mentioned this Friday morning when Chinese shadow bank Zhongzhi Enterprise Group filed for bankruptcy. That company's got about $64 billion in liabilities and on paper, 30 some odd billion in assets. This company is just been wiped out by the Chinese housing sector collapse. Notably, they very famously started buying up Evergrande's debt in 2021, saying, oh, they think the worst is behind them for Evergrande, and they started buying up that debt at distressed levels. Well, that debt was selling at distressed levels for a reason, because Evergrande couldn't pay it back. So Evergrande goes bankrupt, they can't pay it back. Now Zhongzhi is going bankrupt because they can't pay back their debt. The question is, who does Zhongzhi owe money to? And are they about to go bankrupt? And that's your good old-fashioned contagion risk. And that's how financial institutions can fall like dominoes during a downturn. So that happened Friday morning, and it's taken the Chinese stock markets a little while to digest that information. The HangSeng index was down by almost 2% yesterday, including dropping more than 2% in the final hour of trading. The CSI 300 was also down 1% and change. It's basically the equivalent of about a 750-point drop in the Dow from current levels. So not a small drop going on in Chinese stocks. Could also have something to do with the fact that the head of Evergrande's electric vehicle unit just got arrested, disappeared, visited by regulators, whatever you want to call it, whatever you call that in China, citing illegal crimes. Put a pin in that. That's interesting. We've also got what appears to be the ban on hedge funds net selling in China may have been lifted. That might be contributing to the sell-off in Chinese stocks also. A lot of things happening in Asia this morning. And not just Asia. We've got Saudi Arabia has announced that they're cutting oil prices by $2 a barrel. So oil is selling off pretty hard this morning. There's those demand concerns right now. Demand is overpowering the supply concerns over the geopolitical breakdown in the Middle East. So you have two very powerful forces in the oil and the energy markets right now. Demand is winning at the moment. That could shift at any time. So we'll talk about that one a little bit. And Boeing. Boeing stock is crashing this morning. Pardon the pun, whatever you want to say. I don't know what you call that. Is that a pun? Boeing stock is crashing this morning after a window panel blew out mid-flight on an Alaska Airlines flight over the weekend. We have got video of that. Yikes. Luckily, nobody was killed. I hadn't even heard of any injuries. Just a lot of people were really freaked TF out when, the wall opens up on the plane that you're flying in. Now, here's the thing. This wasn't a case of like that famous time when this happened with that Hawaiian Air flight, because it was one of these planes that makes a lot of short jumps, and the cyclic fatigue of the metal in the plane being caused by rapid pressurization and decompression. That's not what happened here. This was a brand new plane, and the window just blew out. So it's another quality control issue for Boeing and the 737 MAX. That plane has just been a total lemon, pardon the expression, but it's been a lemon for Boeing. They're struggling with these quality control issues. The FAA has grounded something like 170 737 MAX 9s around the country today. So more headache for Boeing. That stock is down over 7% at the moment ahead of the opening bell. And it's not all bad news this morning. Some interesting things I noticed. Abercrombie and Fitch and Lululemon both raised their outlook for fourth quarter earnings. Now, these are some boutique retailers that you would never find me shopping in because I think they're ridiculously overpriced. But it turns out they, according to them anyway, they think they did really well in the fourth quarter. We'll talk about that one a little bit at the end as well. And with that, why don't we shrink my big melon of a head and let's see what's going on in markets this morning. Don't forget, guys, to hit that like button while we're here. Really helps with the YouTube algorithm. And if you're new to the channel, hit that subscribe button and have your coffee with the melon heads every morning. The S&P is pretty much unchanged at the moment, down 2 points, 0.05% to the downside ahead of the opening bell. We've got the Dow is down by 154 points or 0.41%. This is almost entirely made up of Boeing here, dragging the whole index down. It would be positive if it wasn't for that one stock this morning. And now we've got the NASDAQ futures are down. I'm sorry, the NASDAQ futures are up 15 points at the moment, 0.1% higher. And all the indexes look like they are trending in an upward direction at the moment, hence the bull icon this morning. And we have got the dollar index at 102.41, down 1 basis point, essentially unchanged this morning. So not a whole lot happening with the exchange rates today. And looking over at the bond market, we got a mixed bag. Yields a little bit higher on the long end. They're dipping in the middle, and then they're flat on the short end this morning. The 30-year, 4.226. That is up 2.6 basis points. We have got the 10-year at 4.047, up about 1 point. Notice those interest rates, guys, since the start of the year, they've been creeping back up. They haven't been shooting up, and they're still way down after just plunging since the end of October. But those rates are starting to tick up a little bit. Keep an eye on that one. The 2-year Treasury, 4.383. That's down about 1 point, and the 1 month is yielding 5.393, up a half a point this morning. Looking over at the commodities board, we have got February gold futures at $2,027. That's down $22.75 this morning, or 1.1% lower. March silver futures at $23.16, down 15 cents, about a little more than half of 1%. We've got platinum is down 1.3%, palladium down almost 3% this morning. But the big news in the commodities board is crude oil here. We've got West Texas Intermediate February futures trading at 71.16. At the moment, down $2.64, about 3.5% lower. So let's talk about that. Oil futures slump as Saudis cut prices. This one hit the tape just this morning. Oil futures slump Monday after pressure from Saudi Arabia when they cut crude prices to all regions, as a survey showed higher production by members of the Organization of Petroleum Exporting Countries. So higher production by OPEC, Saudis cutting prices. Wait a minute. I thought that OPEC was cutting production and we had all these big production cuts and they were extended. Doesn't really look like that's what's happening right now. State producer Saudi Aramco on Sunday said it would cut its official selling price for crude to all regions, including its largest market in Asia in February. The spread for Saudi crudes, including its flagship Arab Light over local benchmarks, will be cut by about $2 to a barrel. When a major oil producer like Saudi Arabia offers price discounts, it's either a sign of concern about weakening demand conditions or an attempt to stop foreign producers such as the USA from stealing market share away. That's according to somebody I can't pronounce, the senior investment analyst over at XM. Either way, it's a bearish signal for energy prices. And at the moment, I have to say I'm leaning towards weakening demand conditions more so than Saudi Arabia deciding to get into another price war with U.S. domestic producers. I just don't see that happening. That is what happened back in 2015, and they drove oil prices down into the 20s at one point doing that. But this seems a little more like they're worried about global demand, trying to keep prices in the mid-70s here. Oil this morning is not liking this news. You can see we've been in this downward channel pretty much since the end of September. Big red candle this morning on this news out of Saudi Arabia. That's undoing a couple of days worth of gains from last week. Currently trading at 71.20 for West Texas Intermediate. And let's talk a little bit more about what's going on in China this morning. China stocks fall after shadow bank Zhongzhi files for bankruptcy. Hong Kong leads losses in Asia. Hong Kong market led losses in the Asia Pacific on Monday, followed by China stocks, which dropped after shadow banking conglomerate Zhongzhi Enterprise Group filed for bankruptcy liquidation late on Friday. The HangSeng index plunged over 2% in its final hour as healthcare stocks fell, while mainland China's CSI 300 dropped by 1.29% to close at 34.72. So Hong Kong and Chinese stocks not liking it. Let's look at the Hang Seng Index here, and you can see it was down 1.88% on the day, falling 310 points. Big red candle for the Hang Seng. And guys, just these are daily candles. Let's zoom out a little bit on this chart. Right now, we're going back to about August. Let's go all the way back, and you can see going all the way back to about the end of 2021, really since the Evergrande crisis kicked off. This thing has just been going down, down, down. Heck, since the end of 2018. You know, here's the COVID sell-off, but we were already selling off when COVID started in the Hang Seng. And then right around February of 2021, you know, we entered this downward channel, and man, we are just continuing down. Hasn't stopped. I mean, it's deviated a little bit lower, bounced above it from moment to moment, but right now, still falling. almost 2% today. And again, this nearly 2% drop, that's about a 750-point equivalent in the drop in the Dow. So stocks in China not looking so good. Now, it could be Zhongzhi and that 60 some odd $billion shadow bank failing, which is definitely going to drag on the Chinese economy. But we've also got this one that just came out today. China regulators lift net selling ban for mutual funds. And I'd almost forgotten about this story that Chinese regulators were basically using backdoor intimidation tactics and strong arming to prevent mutual funds from selling stocks in order to keep their stock market up. That's not working, by the way, as you can see here on this screen. But let's talk about this morning. China's securities regulator is allowing mutual fund managers to sell more shares than they buy each day. Three sources said, removing a ban introduced late last year aimed at propping up a flagging stock market. The Chinese Securities Regulator Commission, or CSRC, late last year barred major mutual fund companies from selling shares on a net basis on any day, answering top leadership calls to stabilize a market that was among the world's worst performers. So, it's nice, right? I guess this number can only ever go up if we just make it illegal to sell stocks. Is that the big economic plan? Nobody's allowed to sell? Brilliant. I mean, I guess that's kind of in line with what Robinhood did during the GameStop craze when they just took away the buy button. Hey, we want stocks to go down, so we make it so you're not allowed to buy it. Well, in China, they want stocks to stop going down, so just make it illegal to sell. No problem. What's the worst thing that could happen? Don't answer that. So it looks like today they have somewhat eased off on that regulation. They didn't outright remove it. One source directly aware with the change suspected that the policy shift was partly due to growing redemption pressure on funds. If you net sold stocks at the end of last year, you'd get a call from regulators, the source said, adding that he received no such calls this year. It's understandable. If you cannot sell stocks, you don't have money to repay redeeming investors. So I guess eventually the pressure from investors wanting to redeem has caused the regulators to walk back this policy a little bit. Also going on today in China, we've got China Evergrande's EV unit says their vice chairman has been detained. Detained, and they done disappeared him. China Evergrande's new energy vehicle group said on Monday that Liu Yongzhu, I apologize if I'm mispronouncing that. Sorry, Lou. Said an executive and vice chairman has been detained on suspicion of illegal crimes, but did not elaborate. And suspicion of illegal crimes. I'm sure if we were to ask Lou, he'd probably say something like, hey, that's not true. These weren't illegal crimes. The crimes I committed were perfectly legal. Oh, crap. That didn't help my legal defense any, did it? Illegal crimes. Department of Redundancy Department is at work here. The electric vehicle arm of the embattled property developer China Evergrande Group also said that its shares will resume trading at 1 p.m. The shares were suspended in the morning session pending a statement from the company. Now, guys, I would also add that Evergrande's founder and CEO, I believe his name was Hui Ka-yan, he has also been under supervision, house arrest, detainment, whatever you call this thing that they do to executives of companies that start to fail in China. He's been under that for several months now, and now it looks like his number two, who is also the head of their EV unit, he is now in trouble with the law. So a lot happening in Asia this morning. Keep an eye on those Chinese stocks over the next couple of days. Now let's talk about Boeing. Boeing shares fall 8% after the FAA grounds dozens of 737 MAX 9s for urgent safety inspections. I read it was somewhere around 170 of these 737 MAX 9s had been grounded after this event. Boeing shares tumbled in pre-market trading on Monday. Shares of Boeing tumbled roughly 8% in pre-market trading as investors digested the news that the FAA had ordered airlines to ground dozens of 737 MAX 9 aircraft for urgent inspections. The FAA issued the order on Saturday after a door plug blew out in the middle of an Alaska Airlines flight on Friday when the nearly brand new aircraft was flying at around 16,000 feet. The incident again thrust Boeing back into the spotlight. CEO David Calhoun had been trying to assure investors that Boeing is getting back on a better footing after a string of problems, including 2 crashes that killed 346 people, pandemic supply chain havoc, and a series of quality defects. Large-scale groundings by aviation authorities are rare, but the FAA has been scrutinizing Boeing and its best-selling 737 MAX since the fatal crashes in 2018 and 19. Boeing said it agrees with the FAA's decision to ground the MAX 9 planes for inspections. It was working on drafting instructions with federal regulators for airlines to begin instructions. Now, check out this video. This is on Twitter. Let me make this a little bit bigger so you guys can see it here. Hang on. There we go. This is how'd you like to be on a plane when this happens? First of all, the masts drop down from the ceiling. Never a good sign. Look at that. Oh, that's not a door that's open, guys. That door's gone. It just blew out. You're looking down at lights on the ground. Oh, man. Can you imagine? Now, supposedly one kid had his shirt ripped off by the decompression when this happened. Nobody was killed. Nobody was severely injured or injured at all that I've read. But, man, talk about a heart attack. 737 MAX has had no shortage of problems. That anti-stall system led to the 2 crashes. There was issues with the inspection of rivets earlier in the year. There were several of the 737s had to be inspected for loose hardware in the rudder controls a few weeks ago. And now we got this one leading to the grounding of about 170 planes. So Boeing stock this morning, not looking so good after that, and justifiably so. How do we get back to the screen that I was on before? There we go. Let's get back to that one. Okay. That's what Boeing stock looks like just as soon as that opening bell rings this morning. I actually drew this red candle in. The stock is currently at 228.90. So I'm actually, hold on, we're down right around here now. Rough day for Boeing stock. That's what we're going to open up at, as you can see. Now, it's had a pretty good run pretty much since rates flipped since the end of October. Boeing stock has gone from a low of about $177 to as high as $267. Now trading around 228, probably heading lower depending on how long this grounding lasts and what the inspections uncover. We don't know what caused this decompression yet, but it's a good bet they're going to have to fix something on the plane. And, well, when Boeing, this one has a measurable effect on GDP, guys. When Boeing lands a big order for airliners with, some Middle East airline or some European airline, it makes a big deal. It moves GDP. A few fractions of a percent in one direction or another. So this is a big story. Keep an eye on this one. Right now, this is a big drag on the Dow this morning. The indexes would be positive without this one. Some other stories I noticed this morning. We'll go through these ones pretty quick. Abercrombie & Fitch lifts holiday sales forecast on robust demand. All right, so Abercrombie, high-end retailer. What would you call this? A boutique clothing outfit. They had a pretty good quarter. And at the same time, on the same day, we got this one. Lululemon raises their fourth quarter targets on steady holiday demand. So, Lulu does a little more of the athleisure thing. Abercrombie is a little more fashion oriented. But both of them are, if I might be a little overly general here, people who don't care what they're spending tend to shop at places like this. All right. If you're somebody who's cost conscious, if you're somebody who's worried about the effect inflation is having on your life, chances are you didn't shop at Lululemon to begin with, and you didn't shop at Abercrombie & Fitch to begin with. So I think these are stores that are probably frequented by people who don't really care how much debt they're racking up. And, well, these are probably companies that benefited the most from the buy now, pay later loans, and probably benefited a lot from people running up credit card bills. So both Abercrombie and Lulu posting pretty good quarters, or expected to post pretty good quarters. So at least a couple of folks did really well over the holiday season. And, we were expecting the holiday season to be pretty lousy because of the return of student loan payments back in October. And, well, apparently people don't care about the return of student loan payments because 40% of borrowers still haven't started making those payments. They're shopping at Lululemon and Abercrombie & Fitch instead. What's the worst thing that could happen? Don't answer that. And last but not least, we got this one from Grayscale this morning. Bitcoin ETF news. Still haven't heard anything formal about it. The SEC still hasn't approved anyone. But we got some news about what the fees are planned to be right now. And this is interesting because Grayscale announces a 1.5% fee for its proposed Bitcoin ETF. Grayscale, which has some $27 billion in assets under management, said it was adding Jane Street, Virtue, Macquarie Capital, all these other guys to the authorized participants list on their ETF. They dropped their 2% management fee down to 1.5%. as part of this proposed uplift from a trust to a spot ETF. They've got some $29 billion in assets. Now, here's the thing here. Grayscale is saying, we did a ton of research to evaluate similar product offerings and fees, including spot and futures funded ETFs and geographies around the world, yada, yada. This is what Bitcoin or Grayscale is saying. However, ETF issues at BlackRock are saying that their fees are going to be between 0.2 and 0.3%. And Grayscale is charging 1.5%. And they're saying they're basing their 1.5% on market research, even though the competition is listing fees that are going to be about 1/5 of that amount. So, look, I am not in any way, shape, or form advocating buying a Bitcoin ETF. I hate the idea of a Bitcoin ETF. And I think when a Bitcoin ETF finally does get approved, I think Bitcoin's price is going to sell off because this is already baked into the price. And I think you're going to have on the news selling going on when this finally happens. All that being said, if you feel compelled to buy a Bitcoin ETF, look at the fees you're paying, guys. 1.5% for one, 0.3% for the other. They're the same thing. You're buying exposure to Bitcoin. Why would you pay the higher fee? So I found this one to be just beyond ridiculous that they're charging 1.5% for a spot commodity ETF like a Bitcoin ETF. So keep your eye on those fees, guys. And that goes for any fund that you might be invested in. And I just want to say thank you very much, says to Keenan Hayward, who asks, is there a correlation between reverse repo balance swings and the 10-year, 2-year inversion pattern? I never looked at the specific correlation between the depth of the inversion and the size of the move in the reverse repo. I can tell you this, the reverse repo is affecting overall bond market liquidity, right? There was all this back and forth between several accounts that I follow on FinX, FinTwit, whatever you want to call it, over the weekend. Really smart guys, and they're bickering and bantering back and forth about the reverse repo drawdown. And is it QE or is it not QE? It's totally not QE. How could you say that? It's definitely QE. Who cares what it is, what you call it, how you define it? It is adding liquidity to the bond market, the wind down of reverse repo. Now, as far as the reversion on the 10-year to the 2-year, I'd have to think about that and marinate on it a little bit more, Keenan, to give you a good answer, because the 10-2 inversion has a lot more to do with expectations of a recession than it does overall liquidity in the bond market. So my gut tells me no, it's not going to have a direct effect, but I have to go look at the chart and see if there is any correlation before I actually make that call. But the big takeaway is that the reverse repo drawing down is a net liquidity add to the bond market. And for the last year or so, the drawdown in the reverse repo has added more liquidity to the bond market than the Fed has sucked out in the form of their quantitative tightening. So the net effect on the bond market since May at least has been liquidity positive, even though the Fed has been tightening, which means we haven't felt that Fed tightening yet. So what happens when the reverse repo runs out and we start to feel that Fed tightening? That might be why everybody is saying there's going to be so many rate cuts this year, because that starts to happen pretty soon. And there was even some language in the Fed minutes last week where the Fed was suggesting they're going to start slowing, or some Fed officials were saying we should start slowing our QT before reverse repo gets to zero, so that we don't have that shock when that happens. So that's a pretty good question, Keenan. But as far as the direct correlation, I'd have to study that one a little closer. But my gut tells me there's no relation between the two. Thank you, sir, for the super chat and the support of the channel. And thank you, Steve Woitis, who says, anyone else suspect that the current administration has quietly encouraged U.S. oil and gas companies to increase production? I'm sure they have. They've probably encouraged them, at least verbally, to increase production, while at the same time MFing them in the media up and down. Every time oil prices go higher, they'll blame everyone from the oil companies to the gas station owners to the guy who sells the lottery tickets inside the store at the gas station. It's his fault. Oil prices are going up. Certainly not my lousy energy policy or my geopolitical CF that I have wandered drunkenly into. So are they probably pushing oil and gas companies to increase production? I have no doubt that they are saying that, Steve, while at the same time doing everything in their power to make it less economically viable to do. Case in point, both Chevron and ExxonMobil took several $billion worth of hits and charges on their last earnings report because of things going on in California, because of the regulations in California and all the hurdles and the paperwork that they have to overcome to get anything done there. They're saying that they basically devalued assets in that state by billions of dollars. Both of them did it in the last quarter. So I have no doubt they're saying produce more while doing everything to make that impossible. Thank you very much, Steve. I appreciate the super chat, the support of the channel. And thank you, Joey Socks, Italian gangster name if I ever heard one. Thank you, Joey Socks, who says, great show. I appreciate that very much, Joey. And that is a great note to end on. So a lot of things happening in China right now. Keep an eye on that Boeing stuff. That is a big drag on the market. Oil is heading lower on price cuts. And the high-end retailers did all right in the fourth quarter. That's all I got for you guys this morning. Thank you, everybody, for your generosity in the super chats. Thank you to my Patreon supporters for everything you guys do for the channel. Hi, Mom. Hi, Dad. I love you guys. And until next time, live small and dream big.